Hello, and welcome to another episode of Mindset Monday. Thank you so much for waiting. We had some technical difficulties, and I know you'll be here waiting on me. So, thank you so much. Today is September 9, 2024. And what can I say? September to remember. This is another day that we are talking about preparing for your wealth. And as we always say, that wealth or any concept begins from the mind. So once our minds are in the right place, once our minds are centered, once our minds are balanced, we definitely will be able to achieve anything in life once our minds are directed to the right things at the right time. So today we'll be talking mainly about tax planning, prepare for your wealth tax planning. And don't you know that preparing or proper preparation will alleviate a lot of the stresses that we go through. It will help us manage the stresses. Let me just pull this down a little bit because I'm so short. So I guess you can see me now, right? Okay. So yes, preparation will help us balance the stressors. And in preparation, things can happen. Just as I was ready to start the program, there were some technical challenges. But because we were prepared, we navigate through those things and here we are. So thank you for waiting so long, almost 17 minutes. Thank you so much. You know that sometimes we are standing in line and 1 minute seem like it's an entire year. So I think 15 minutes is like 15 years waiting. So thank you for waiting on us 15 years just to listen, just to gain information from what we have to say. Thank you so much. I know your time is very valuable. So today we have our favorite in-house guest, Jennifer Cantando, and she will be juggling with me as normal. Thank you with your beautiful, sunshiny California face. Thank you for joining us. And it's always a pleasure to have you in the house because we are family. Okay. All right. So we'll be talking back and forth, talking about different strategies of planning, tax planning. And one thing I was reading over the weekend, and which I know for a lot of parents who are actually looking for colleges for their children, it is so important that you find out in your state, in your county, what scholarships, what programs are there, what is out there for your kids. Because if you are able to research for those things, your child can go to college free because you do the work, but it takes a lot of work. I will give you some more information in our next episode, but this is one discovery that a lot of people don't know. Monies are out there for parents, for families who are finding ways to get their kids to school, but there is a little work. Some have to write essays, some have to present different things, but there are programs out there for parents to send their children to college. That's also one of our one tax planning strategy. Jennifer, thank you for coming. How are you?
I'm wonderful. I said that real slow. Wonderful. I'm wonderful, Miriam, and happy Monday to everyone and all everyone that follows you and all your audience and just want to welcome everybody today. And like we said, we're going to shift gears today. We're actually going to put Miriam on the spot. She's been
Yeah.
so great at interviewing me and asking me questions for her audience. But now we're going to pick Miriam's brain today, and it is a wonderful brain, and it's very intelligent and has a lot of things that is great. And she loves to share her knowledge. She's just like me in that we talk to each other, of course, off screen, and we are friends off screen. We always talk about how we just love, we have this love for people and wanting to help families and wanting to help people. And that's why we took what we've learned and really applied it to others, and sitting down with them, like she just said, she's going to give you some nuggets about the kids getting ready for college. I can add to that, Miriam, and I say you always want to sit down with us because of the fact that we can definitely shift money around or give you advice on where you should have your money, so that programs aren't held against you for saving money for your kids. So make sure that that there's a lot of programs out there too. And sometimes we're dinged for just saving for our kids, but there are ways around it that if you sit with someone, they could really help you. Some financial professional like ourselves, they can help you and guide you through the process. I always say sit with them at least 2 years before the kids go to college too.
Most definitely. That is so true. And as you're on that, for for those of you who have not yet filed your taxes, remember we are now in the extension deadline. September and October is extension deadline. September is for corporation and October is for personal. So make sure you are gathering, if you haven't gathered them yet, hurry up and send them in, and make sure that you get it in before the extension. So extension of time is for filing and not paying, because if you fail to pay, interest is accruing on the balance that is outstanding. However, if you owe and you also haven't filed yet and you filed an extension, if the extension expires September for businesses and October for personal, yes, October for personal, if the extension expires and payments are not made, you are both um, having penalties for late filing and late payment. So you don't want to give Uncle Sam more than what Uncle Sam needs to get. If you want, if you have money to, shell out like that, I would be grateful. I would be happy to get it, because what I would use it for is to assist young children, young adults who are going to school and they have no means. Their parents are either not around. There's a fund that we are preparing for situations like that. So if you have monies that you really don't want, you please file your taxes on time, so that if you have a little bit more money, I can get it, so I can put it in that fund so I can help those children. But don't give it to Uncle Sam. Uncle Sam don't need it. Uncle Sam is not going to tell you I don't need it. They will take it. But give it to me so I can help. I can assist young adults to for educational purposes. Thank you. That's a disclaimer.
I love it. I love it. I have one question for that, Miriam.
Hmm.
Do you need to file an extension if you don't owe?
Okay. Well, it is recommended that once you did not catch the initial deadline of March for businesses and April for personal. Um, some people, they did not owe last year, but their situations may have changed and they are not sure. So it is recommended that an extension is filed for people who missed the the initial deadline for taxes. Now, if you know you don't owe, you really don't have to file extension, but it is recommended because something could be there some paper that may have come in late, and you may have gotten a huge sum, or some people who play the lottery, they may have gotten something, and they may have won and did not get the 1099 early. So when they file their taxes, they have a big tax liability because that income was not on their previous year. So
That's
those
very
are the
good.
things. So when you file the extension, you will not be charged the penalty of filing late if you meet the extension of September or October. But if you did not file the extension and you owe, you would be paying a penalty for late filing also, and it can be a hefty sum.
That's good. So either way, whether you, I mean, whether you definitely, if you owe, there's no question about it. But if you don't, cover your bases and make sure that you just do it for peace of mind.
That's
So
right.
that's great.
Mm-hmm.
So that being said, is everybody ready to get into it? We ready to put Miriam in the hot seat this time? I'm enjoying
Absolutely.
this because usually it's me. So and I love and it's not the hot seat. It's a very comfortable seat. But we're gonna put you in the seat where we're going to ask you some questions, and we're going to ask questions about where we left off last time. I believe we left off last time, and what we want to know, and what your viewers want to know, is how do you utilize accounting software when doing this and in utilization and
Okay.
invest. Yeah, go ahead.
Utilizing accounting software, it takes most of the guesswork, because once you have the documentation, the accounting software is designed based on taxable taxable events. So everything that is necessary for taxation would be in the accounting software. And with AI, it's even more, um, what would I say? It's even more knowledgeable, so to speak. So you would gather, once you pull it down, you would gather information. It will tell you what is needed. And so you'll have everything that you need at your fingertips. So if you have a small business, it will identify all of the necessary, depend on the business type, it will identify the basic necessary things that you encounter in your business. So it's a very good thing to have, and it also assists you in alleviating the penalties or the pitfalls of not including stuff in the preparation, because your tax accountant may ask you for certain documentation and you say you don't have it, when of course you do have it, but you don't know that you have it. So it's important to, yes, see what's in the tax software, and so it will help you with your accounting. So at the end of the year, when you're ready to file, you can just take the summary. If it's a small business, that is, you can just take the summary to your tax accountant and they will input the detail. Now if you have been dealing with a particular tax accountant, and there's certain documents that consistently was included in your return each year, and the accountant did not see that, they will say, you normally have this, but I only see this and this. What happened? So, in as much as you take the summary to them, if they see an inconsistency based on the expenses or the revenue, they will ask, and then you would either supply them with the supporting documentation because that was not included. So it's important. It takes a lot of the guesswork, and it is also more transparent.
So a good accountant will definitely see that, whoa, there is a big difference in last year's, this year's, like compared to this year's. Let's go. like what is going on, kind of questioning like what's going on. Are we missing something, or is there did there something happen? Is that why there's such a gap, or something changed or shift, right?
Right.
That's a good. That's what a good CPA or accountant would do, or somebody that is doing your taxes. That's awesome. That's amazing. I also to add to that, I have a whole separate email too. So any expenses or anything like that, I like to have my email, my business email attached to it, so I can go in there if I ever forget things, and I have all my whole emails of all the things that I've. They could have been transactions or something I signed up for. So I always use that email so I know. Oh, I signed up for this, I did that. So there's a great thing if you're a W 2, that if you have a side business as a sole proprietor or a 1099, you can have something that is called write offs that will definitely help your business. I know that for a fact. It's almost fun when my agents are a W 2. They decided that they want to have more write offs because they're making a lot of money. And they go to their tax professional and they hand them their W 2. And then they say, oh, you owe. And then they give them all their write offs. And then they say, oh, you don't owe.
That's right. Because once they are necessary expenses for the business, then of course that is writable. That is actually a deduction.
Yes. As a W 2, there's not a whole lot that sometimes one can write off.
Correct.
But as a small business owner, sole proprietor, 1099 age, anybody that's 1099, now you can talk about write offs. So that definitely helps with keeping the taxes down. I do know that.
Very good. You are
Everything else is you.
yes, you are I can see the student has learned a lot. That's very good.
Yes.
Very good.
Yes,
Very
I
good.
do take notes on it. What's great is being a co-host and helping with the show and talking with things. It's also good to be a student because you never, um, you should always be learning. Even if you think you know things, you should always be learning and taking notes. And I tell people when they meet with me, okay, do you have your notebook and your pen? Because we're gonna teach you some things today. So I always love that.
And
Anytime. Go ahead.
finish your statement.
Anytime anybody comes in, I make it. I'll give them a piece of paper and a pen of mine if they don't have anything, just so that they can write down this content that I think is absolutely amazing and everybody should know. So walking away from my office or leaving a Zoom, there's an empowerment. I've shifted my knowledge to them, and it's usually it's amazing when you can do that or reciprocate that. It goes back and forth too. So it's always nice. Go ahead, Miriam.
And for the techie, you will see them on their phones. They have a notepad and they will just keep going and going and going. And they say, "What you doing?" "I'm taking everything that you said." I
Oh,
said,
I
"You have
know.
everything there."
I know. I feel guilty. When I feel guilty is when I do that in church because I feel like the pastor thinks I'm on my phone. I know that's way off the subject, but anytime I have my phone and I do take notes that way, I feel like somebody might take it as but they do. And sometimes I forgot my Bible and I'm on there and I'm thinking, "Oh, and luckily I'm good friends with my pastor, so I'm like, I'm not on my phone. I'm taking notes, right?" So he's like, "Yes, I know."
Well, on a side note, something like that happened to me years ago. Someone actually zoom in on me, take a picture saying that I was using my phone in church when I was actually taking notes. So the fact is, once you know your motive, at 99% of the time, you cannot get away from you being accused of things. But once you know your motive was opposite of what was said, it should
Yes.
not bother you.
Well, Miriam, that's why we're good friends, is because you have integrity. And that goes a long way. Because you're very congruent with how you are with your audience, with behind the scenes. So that congruency is there. You don't change who you are. So that I like that. I love that about you.
Yes.
Okay. So the
One
next
of the
thing, oh, go
one
ahead.
of the topics we were talking about, which we left off, is estimate payments. So I don't know
Okay,
if you
let's go
want
into that. Let's go into estimated payments. Okay, we want to know more about estimated payments.
one person had asked who should make estimate payments, and I did not answer that last week. So small businesses, self-employed individuals, individuals with significant investment, that means huge investments, rental property owners, and retirees. So let me start from the bottom up. For retirees, sometimes they have substantial income from sources like pension, annuities, social security, and distribution from retirement accounts. So a lot of times what I see with my some of my clients, they get their 1099R and their other 1099s from their annuity payments and all of that, and no taxes for the 1099R, no taxes were withheld. And for pension, if it's a 401k, remember it was the taxes were deferred. So once it's a huge sum, taxes, you need to pay taxes. So if you have huge amounts of new retirees, find out if you can have taxes withheld from the your pension, and so it will alleviate you having to pay a huge sum at the end of the year or when tax time comes around.
I
When you
love
have huge, sorry, go ahead.
I'm sorry, I didn't mean to interrupt, but I think, and this is just my way of thinking, is that I don't think a lot of people know that they can ask to have their taxes withheld, or they're not, they're not thinking, I have a pension, or I have this, or I have that. So on most retirement funds, do you see that they are not taxed until you go to do your taxes because they haven't taken out the taxes in the distribution portion of, say, I'm getting my pension or I'm getting my 401k. When it's received to me, I'm not paying those taxes right then and there. I need to do my taxes at the end of the year. And is that when I'm going to be paying my taxes?
So what happened? The pensioners don't actually know that. So the first year when they see their statement, some people know. I know for some that they're retiring, and some said, "What should I do?" I would advise them to ask for that to be done mid-year. So at the end of the year, they see this distribution, total distribution, taxable distribution, and so both are the same. And then taxes withheld. So if it's zero, then you know that you are gonna be paying taxes on those monies because it was a tax deferred investment. So you're gonna have to pay taxes. So it's important now that you see that no taxes was withheld, you call up your pension board or whomever it is, whether it's 1199 or whoever holds your pension, ask them to have taxes withheld. If you're someone who rather to use all of your monies up front and then you pay tax in the back end, then that's fine. But for the most part, people don't like to see a tax liability, meaning that you have to pay back at the end of once your taxes is filed. So that's one set that should make. So if it's not being withheld, make estimate payments. And once I go through the list, then I'll let you know when estimate payments should be made. The next set is rental property owners. So if you earn substantial amount of rental income, it might also need or necessitate you making estimate payments. Another set is persons with huge investment income might need to make estimate payments. And small business owners, also a partnership, a sole proprietor need to make estimate payments, because what happens, you're getting 1099, and 1099s, you got all of the money, so you need to appropriate it with your expenses. So you take the expenses, reduce the income, and then whatever is there, you pay taxes on that. Student is writing. Good evening, Roslyn. Good to have you. Thank you for joining. I know we started late, but I'm happy that you are here. And for those who will be seeing this on the replay, thank you so much for waiting. I know some of you had to go because waiting 15 minutes is like 15 years. Uh, so, okay, over to you again, Jen.
No, that was great. I love the fact that you covered that and you went into detail. That was that that definitely lies with me and some of these things. So I really appreciate that because and also when I'm sitting down with families, a lot of people don't realize that the taxes aren't going to come out until they at the end of the year. Somebody that isn't really invested in their retirement or really understand the intricate details of how it works or the functionality of it, sometimes don't realize I'm going to have to pay taxes at the end of the year. So it's good to let them know and give them a heads up. Hey, this is going to be coming up. Like, are you prepared for it? And if not, maybe you should get the taxes withheld as soon as possible, right?
Now, if all else fails, let's make estimate payments. And when do you make estimate payments?
Yeah.
Estimate payments are made, the first quarter is April 15th. So, right around when you file your taxes. So, it's 4 quarters. The first quarter is April 15th. The second quarter is June 15th. And the third quarter is, make sure I can count, right? The third quarter is September 15th. So in another couple of days, you should be making that third payment, which is, so if it falls on a weekend, I think the following day. So it will be the 16th this September. So the next one will be September 16th. But if you can make that payment on the 14th, it's good. And the fourth quarter would be January 15th of the following year. So again, April 15th, first quarter, June 15th, second quarter, September 15th, third quarter, and January 15th, fourth quarter. So if the date falls on a weekend or a public holiday, it's the business day after. And making timely estimate payments, it's good because it helps to alleviate a lot of the. I thought you were going to finish my statement. It alleviates you make paying all of those little monies that you don't need to pay to Uncle Sam. All right. Now, one of the one of the reasons, or how do you know you need to make estimate payments? um, I'll give you more information in the coming weeks, but one, if you know you're gonna owe at least $1,000 the current year, you need to make estimate payments. There are many other scenarios, but that would be detailed, and that is when you would sit with your tax professional, and then they will go through the finer details with you. as to, yes, you need to make estimate payments because you're gonna owe $1,000, and that sort of thing. So tax planning is important, especially, as I think I alluded to this previously. If you are gonna venture into a business, then it's good that you sit with your tax professional and said, I am entering into this little thing, and based on my projection, I'll be getting this amount. And they will say, you need to secure some monies, make some estimate payments, so you will not be frightened when you see that tax bill at the end of when you file your taxes. So being proactive is very important because it saves you a lot of anxiety. Oh my goodness, I and then you cannot go on the vacation that you were saving up the little money for. I'm gonna have to pay that. Yes, because you made the money, but it's just that it was so nice, but you did not expect to be paying so much. So if you look at it, once you make money, you gotta pay money. But it's good when you know why you pay, so you're able to navigate the whole system. And then as you're making the money, you have your enroll agent, or your CPA, or your other accountant assisting you, because doctors, I can't doctor myself. I can't write my own prescription. The doctors cannot do their own taxes unless they're just W-2 doctors, and they don't even want to do it. They don't want to do it. So get your information to the professionals so they can assist you in managing that aspect of your life. And because it's seasonal and it's just once a year, you once you get your package from your tax accountant, you just take it and you said, oh, I'm done. And then you are ready again January of next year when you get your W-2, if you're a W-2 employee, or if you are a sole proprietor or other business owner. Being proactive save you time and money. So don't just take your thing and just drop it and say, I'm done for the year. No, this is the right time of the year, September, from August to December. You start gathering your documentation, and then just surprise your accountant. Say, listen, I have everything. And surprise them by, remember, call them. Let's say, call me if you need someone to talk to. But guess what? The accountant is, we don't necessarily want you to call us every time, but I'm telling you to call us because it alleviates the stress from you trying to find things. If you see things, unusual letters come and it says for tax purposes, just find out what this is for. It could be nothing, but be sure to find out and don't throw it away.
I hope everybody's taking notes. This is good content. This is amazing stuff, Miriam. This is really good. Appreciate you being on and letting us know all this. Is like it alleviates the headache for you as an individual and for the professional that is doing the work for you. Have enough, have a respect that you give them, not just a, craziness, but that you're able to be involved and have organization in hand to hand that over to it. This is your, this is very important. These are your documents. These are things that need to go. And I know when it says important tax, it has that on the, like you said, on the envelope. I'm like, okay, I take it, I read it, and then sometimes I forget about it, so I file it right away with my taxes to when I go do my taxes, I can pull it out and then remember it. So it's something I automatically do because I know I'll put it somewhere else, or I want to read it later, and it's just, it goes right into the file so that I can pull it out later. And when and it's time to really take a look at it, then I know, hey, what's going on here?
Okay.
What am I putting together?
Awesome.
Um, okay, so Miriam,
Mm-hmm.
what about considering tax efficient investment strategies? I'm sure you see a lot of this come in front of you, but what is things to consider when it comes to tax efficient investment strategies?
Tax efficient investment strategy. And I'm going to flip that over to you. I'm just going to say it and then you can expand on it.
Okay,
So,
that's
uh,
good.
one tax efficient investment strategy, I know one of them are annuities, correct?
Hmm. Yes,
And and life insurance that has cash value attached to it. Big viewers, that's one tax planning strategy, because for some of you, you may want to borrow from your 401k, and if you borrow and don't pay back because it's a tax deferred investment, you are gonna be owing taxes. But if you have a life insurance policy that has cash value accumulation, you can borrow from that and you don't have to pay taxes. Oh,
I
I
love that,
answer.
Rose.
I should have given you the I answer, right?
No, no, the student becomes the teacher. I love it. No, that is awesome. That is absolutely right. Is that, there is uh, I didn't know if you were done. I was just writing down a couple things.
Right. As you while you're writing, as a licensed insurance agent, I that I we help families. It's like I am sandwiched between two beautiful things. The tax is the tax aspect and the insurance aspect. And just so you know, they both go hand in hand. And this is why it is so important sharing with you tax strategies so you know where to pull your monies when you really need them. And then you don't have to worry about the tax implication, because not it's not one size fits all, and all investments, they're not balanced the same way. It's good to have diversified portfolio, but it's also good to know when to pull, what to pull at what time.
Yes, absolutely. I agree. And that is so important. And when um, we're talking about different investments, we want to talk about qualified and non-qualified money, right? When you look at qualified money means that the taxes haven't been taken out. And when you
Hmm.
look at non-qualified money, it means the taxes have already been taken out, which for me, it threw me for a loop because I thought it was the opposite. I'm like, oh, it's qualified money. They already took the taxes out. And I'm like, nope, wrong, And and when you're looking at it on the other side and Uncle Sam's looking at your money, he's saying, this is qualified money, this is
Which is,
non-qualified money, right? And I'm
yeah,
thinking on the other side, right?
no, it's qualified for me to get my money. Uncle Sam is saying it's qualified to be taxable.
Yeah, exactly. Now you got qualified money to be taxable. And you're right, Miriam. You said it, excellent. When you're strategizing, and there's great books that are out too. And I want to definitely, like I didn't do it necessarily. All my strategies weren't tax free in the beginning. But now that I have kids, and now we're talking about setting them in a ways where their money is more in the tax free area because, in the future, taxes look like they're going to go up, right?
Mhm.
And so with that, why would I advise my kids, because that's my first, those are my, the first, people I work with, right? That's but you start with your family and you build your clientele out, right? So in looking at my kids, I have an older son that we talked about too, that's in nursing, and I have younger ones too, but he's the one that I've been working with the most. Is that, when I was younger, I had a lot of tax. taxable investments or tax deferred investments like my 401k, my pension, stuff like that. Now I'm educating my kids. If I see taxes are going up and in your future, I mean, it's not going to hurt. If taxes go up and my kids don't pay taxes, that's a big win. If
Mm-hmm.
taxes are low and my kids don't pay taxes, that's still a win. Either way, I'm setting my kids up for success in the future, right? So with that, there are ways to, make sure that you have, you can do it that way. So some people want to have a tax-free investment later on. And it's funny, but if you just put like a Roth in front of your investment, like a Roth 401k or a Roth IRA, that is money that you've already paid the taxes on.
Mm-hmm.
So that becomes a tax-free investment, meaning
Correct.
that you don't have to pay the taxes later,
Mm-hmm.
right? That's a Roth 401k, a Roth IRA, cash value life insurance, like you were talking about. For me, I would rather pay on because there's the cost of insurance and then there's cash accumulation in that. For me, I like the idea of instead of paying the taxes on my vehicle, I'd rather just have the life insurance so my kids would have a tax-free, investment. They get that tax-free. It's generational, right?
Mm-hmm.
I can leave it to my kids. It's an inheritance, tax-free. They don't have to pass, the government's hands. They get to go to my kids, straight to my kids. And mind you, no other investment can really do that for you. um and then you also have, that it would put you all into a tax-free vehicle when you go to retire.
That's a
So
nice legacy. A
yes,
nice legacy. Oh my goodness.
exactly. So knowing these things, and then like, Miriam said, if you don't have tax free, add the tax free and you can strategize how everything you can lower your taxes by having a tax free investment, right? Because say you have investments that have you got to pay the taxes on. Now it causes your social security to have taxes, but you know what? And you can lower both sides by having the tax-free investment. And that's
Nice
what we're talking about.
balance.
Yes, yes,
Nice,
exactly.
nice
So
balance.
I speak it, Miriam sees it. She can back me on this because she sees it, she knows it. This is going to come through her hands and she can give the best advice for the person, right? And sometimes people need the tax deduction on their 401ks and such like that. So that's why you sit with somebody to get to know what works best for me. And in the sense, if you can be well diversified and have your money along, if I typically like everything tax free. I say if you could do it, why not?
Do it
But
now.
some
Do it
people
now.
do it now, right? We talked about do it now. But some people they need the deduction, right? So that is a big thing. Even with my son, he's not married, he doesn't have children, he doesn't have a house. So for him, he needs some deductions. He needs some write-offs. He needs some things like that were set up for him. But
Mhm.
at the same time, also preparing him that eventually you will have to pay taxes on anything that these deductions are great, but eventually you will have to pay the taxes on it too, because you might get that little right, you might get that little deduction now, but in the end you have to pay it, and that could be a big price. So it matters on the individual, and then they can see. And that's when me and Miriam would get together and say what looks best for you guys, and what would hurt you and what would help you. And that's where we work together well with the CPAs and getting to know like what your individual plan is. And I think that's so important. And I'll go ahead and hand this back over to Miriam. But I think that was just a little tidbit of just like
Yes.
some of the strategies that are out there when they are coming. When you're looking at real estate, tax always. That's always going to be tax, right? So that's in the tax always. But when you're looking at everything else, you really have a lot of options. You just have to sit down and figure out what works best for you. And sometimes your financial advisor might not have the tax-free investments because he's not a licensed agent, licensed life agent, right? So he might not. If you're not life licensed agent, then you can't offer some of these products too. So you really want to even do research on who you sit down with. Do they have the license to give you everything? Or are they just giving you one thing and not and not giving you the whole picture of what your options are. Very important to look at that too.
So, as a life agent and as a tax accountant, as an enroll agent, so I can assist you with those investments, and I can also represent you before the IRS if you have those challenges, and I can also prepare your taxes. So, I will guide you, and if you have questions, feel free to ask. I will guide you, and then you go back to your own tax accountant to take care of you. Because one thing, it's good when you are knowledgeable, so you're able to have a more involved discussion with when you sit with your tax accountant. Hello, Martlin. It's good to have you. Thank you so much for joining us today. And the time ran off so fast. We are just getting started, but we will be happy to share more with you next week when we convene. Remember to hit the notification bell and share, please share, 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 because when information is dropped, then you can be the first one to see. Once again, I am apologizing for the technical difficulty, but I'm happy we were able to connect with you, even though it was 15 hours, 15 hours late. That's a 1 minute is like 1 year. So it's like 15 years late. But it's better to be late than never. Just want to appreciate you viewers for your time. Thank you for supporting this channel, and we're happy to help you in whatever way we can. Once again, this is another episode of Mindset Monday. Have a wonderful week.